push the regulator to make a regulation on that. Then the regulation scrutinize the counting standard for a long time. Then after discussion, long time discussion, then the financial asset is divided into three. That is for trading or marketable securities, for investment or held to maturity, then IFS, available for sale. Actually, accounting standard setter wants that the company clearly show the future cash flow of their marketable securities. So the accounting standard govern that the company should clearly picture their future cash flow generated by their financial instrument. If they buy, say, bonds with fixed rate, that they won't sell it until maturity, then the future cash flow will be on the interest, periodic interest, and at the end of that, they get the principal. That's why they don't have to mark to market the bond. But if they buy the bond for trading, daily trading, then the cash flow might be high or low, depends on when they sell it. If they sell it when the price is up, then the cash inflow will be high. But when it have to sell it when the price is down, maybe because they need money, they have the shortage of money, and they have to sell the marketable securities at loss, so they have to recognize loss. So actually, the intention of accounting standard is to make the company describe their future cash flow from financial assets clearly. Then, because of that, most of the investors in stock market wants that all company state their all financial assets reported as for trading. That's actually what the stock market wants. So all of the financial assets reported as marketable securities. That means they have to be reported at market price, whatever they want to, their intention is, but they have to show it at market price. But many stakeholders during the process of making financial accounting standard do not agree about that. Then they have compromise among stakeholders during the process of determination of financial accounting standard, so that there was compromise that the financial asset divided into three, that is held to maturity, marketable securities, and available for sale. And for moving from one part into another part, or one category into category, is really regulated. It's really regulated. So if you can see here that if you buy a financial asset, then you categorize it as fair value through profit and loss. You cannot move it into other category. You can move it into held to maturity. You can move it into loan and receivable. You can move it into available for sale. And also, if you buy a financial asset and you have assigned it as held to maturity or loan and receivable or available for sale, you cannot move it into FATTR. So the regulation is because to avoid the what people call cherry picking, yeah? So that people cannot use this to manage their profit, their earnings. That was the history, and up to 2010, there was no such regulation. That start from 2010, the regulation is like that, and then at the time uh, the held to maturity and loan and receivable is separated. What is difference between loan and receivable and held to maturity? Held to maturity is for long-term investment with market ready. So if you buy a bond, then the bond has market so that you can sell it anytime. But you intentionally want to hold it until maturity, then you can categorize it as held to maturity. But if there is no market ready to sell it or to buy it, then you categorize it as loan and receivable. So loan and receivable and held to maturity actually almost the same. The difference is only held to maturity has market ready, but for the loan and receivable, there is no market. So if you make a loan, you give a loan to a customer, then your receivable on your loan you cannot sell it easily into other people. If you cannot sell it easily to other people, then you have to categorize it as loan and receivable instead of held to maturity. But if you can sell it to other people in the market, then you call it held to maturity. Then if you have marketable securities, maybe for trading, but sometimes you held it only for idle cash, then you call it IFS. This is the category that start from 2010 implemented in Indonesia because of IFRS adoption. Then before we can learn that from before 2010 in Indonesia, the accounting standard for financial asset is governed by the regulator. That is for the central bank at the time. They have authority to regulate the reporting form, yeah, to the central bank. Then the regulations stated by the government, by the central bank, it looks like it becomes the accounting standard. So the accounting standard is follow the regulation standard in reporting stated by the central bank. That's before 2000, maybe 2004, maybe before 1994 or 1995. In 2010, because of Indonesia joined G20, then Indonesia has to follow IFRS. Actually, IFRS stated in maybe 2008 or 2006, but the banks not yet ready to implement it until 2010. I think Pak Untoro will explain this later because he wrote much about this. Yeah, Pak Untoro? So start from 2010, Indonesia implement the international financial reporting standard, and the main difference is actually this is before IFRS. The main change in the regulation may be about the interest recognition, interest revenue recognition, or interest expense recognition. Before IFRS, I give this an example. Say on May 2010, Bank ABC extended a loan of 30 million rupiah, interest 12% per year flat. 12% per year flat. That means 1% per month flat. Maturity in say 30 months or 3 years. Then interest and principal paid monthly. For this, the payment will be 360 million divided by 36. So 10 million. 10 million is the payment for principal. 10 million per month. Payment for principal. 360 million divided by 36. Then the interest will be 1% multiplied by 360 million per month. That means 3.6 million per month. 1% times 360 million. So although the principal is reduced 10 million every month. So at the first month, the principal is 360. The next month, the principal should be 350 because it's already paid 10 million. For the second month, the principal should be 340 because it's already paid 10 million. But before IFRS, the interest revenue recognized was 1% multiplied by 360. Although the principal is actually went down every month. This is accepted by all banking sectors, and also the central bank accept this presentation. So the journal entry for this is when they give loan, debit loan, credit cash, then a year later, a month later, debit cash 13,600, loan 10 million. 10 million is 360 divided by 36, 10 million. Then interest income is 3,600,000. That is 1% times 360. For the next month, it's also the journal entry is also like this, So the interest is also 3,600,000. Although the principal now is only 360 million because the customer already paid 1 million here. After IFRS 2010, this presentation is not allowed anymore. It's not allowed anymore. That's why at the time there is a lot of work in the bank to change their computer program for calculating the interest. A lot of bank has to change their accounting software, because when they calculate the interest, they cannot use this kind of calculation anymore. They have to change into this. They have to change into what we call it effective interest rate. Effective interest rate. The effective interest rate is like this. The effective interest rate is that we have to calculate the IRR. IRR is internal rate of return. Sorry Bu Bibi, bisa lihat nggak Bu Bibi?
Udah Pak, nampak Pak. Terlihat Pak.
Excelnya kelihatan.
Kelihatan Pak.
Kelihatan Pak.
Thank you. So after IFRS, we have to make the cash flow first. The principal is 360. This one like this. Then we have to calculate the effective interest rate. Effective interest rate is like this. The formula is like this. Rate, R-A-T-A. This number of period is 336. Payment is 30,600,000. Then the loan is 360. So this is what is called effective interest rate. Effective interest rate. Then the effective interest rate is multiplied by the balance of the loan. This one multiplied by the balance of the loan, we get the interest income. Then the difference between 13,600,000 deducted by 6 million, this is the interest. This is the amortization of the loan. Then the next amortized cost is this deducted by this. This is the amortized cost and so on. So using this calculation, the interest will be getting smaller. Then the principal payment will be getting higher. Like this. This one is getting smaller. This one is getting bigger. But the sum of this is 13,300,000. With these changes in interest rate recognition, many banks in Indonesia get higher profit when the first time they implement the IFRS. Why? Because the interest is bigger, 6,300,000. It's higher than 3,600,000, right? 6,300,000 is bigger than 3,600,000. So the income statement at the time in 2010, without any hardworking, but they have higher profit only because of the changes in regulation and in accounting standards. So this is the first changes in 2010. Beside the what you call it, the classification of financial asset. Yeah, financial asset at the first time is divided into 4. 2010, the financial asset is divided into 4 categories. That is fair value through profit and loss, held to maturity, loan and receivable, and IFS. What is the main problem here is that because most or maybe 100% of the loan in Indonesian banking industry is actually held to maturity. There is no habit in Indonesian banking industry to sell the loan before their maturity. Most, maybe all banks, after they give loan, then they collect it until maturity. So the almost 100% loan is actually categorized as loan and receivable, because there is also no market available, so it's impossible to put it into held to maturity. So all of the loan is categorized as loan and receivable. And because we never sell it before maturity, it's impossible to categorize it as available for sale or fair value to fair value through profit and loss. So all of the loan in Indonesian bank balance sheet always categorized as loan and receivable. So usually they make a report like this: say a loan fair value through profit and loss 0. Then held to maturity 0. Available for sale 0. And loan eligible, there is number on that. So always 0, 0, 0. Then all of the loans categorized as loan eligible. So actually, what is stated from International Financial Reporting Standard is also, it's actually not effective in Indonesian reporting standard, because no loan categorized as other than loan and receivable. Then the third part of changes in accounting regulation or in accounting standard is the loan losses. Before IFRS, the loan losses is stated by the government. There are 5 categories of loan: past, special mention, substandard, doubtful, and loss. It depends on the past due, how many days past due from the contractual contract of the loan. If it's past category, then the loan losses is 1%, special mention 5%, substandard 15%, doubtful 50%, loss 100%. Then they multiply this by the loan, they get the loan losses. The loan losses, then the journal is loan losses and allowance for loan losses. This kind of calculation may be lasting for more than 20 or 25 years, maybe 30 years. The calculation of bank loan losses is always like this. Always like this. Nobody try to questioning this. Why it's 1%? Why it's not 2 or 1.5%? Why it's 5%? Why it's not 6% or 7%? Nobody questioning that, because this is stated by the regulator. So the regulator has the right to determine this. Then that's all. Nobody questioning this. That is the authoritative financial accounting standard at that time. After IFRS, the provision for loan losses is calculated by the impairment loss calculation. That is the difference between the present value of contractual cash flow, the difference between contractual present value of contractual cash flows and present value of expected cash flow. So if a bank gives a loan to a customer, they usually have a loan contract. Then at the loan contract, there must be a schedule for payment. Schedule for payment on the loan contract is called it's called contractual cash flow. So contractual cash flow is the cash flow stated in the loan contract. If the bank still can expect that the cash flow will be the same as the contractual cash flow, then there will be no loan losses. No loan losses. But if there is some financial trouble in the debtors company, then maybe the company, the debtor cannot pay as much as the contractual cash flow anymore. So they can pay maybe, but at the less than the contractual cash flow. Then we have to make a loan loss provision. The loan loss provision is the present value of contractual cash flow deducted by the present value of expected cash flow. So the expected cash flow must be smaller or less than, the expected cash flow must be less than the contractual cash flow. That's because financial problem in the debtors company, they cannot pay as much as the contractual cash flow anymore. So this must be less than this. Then the difference is the provision for loan loss. So the example may be like this. So if a bank give a loan and the contractual cash flow is 10 million, 10 million, 10 million, and this is 210 million. So the principal is 200,000, yeah, 200 million. The principal is 200 million and the interest is 10 million. This is the contractual cash flow. And if the bank still can expect that the debtor will follow the contractual cash flow, so the expected cash flow is also like this, then there is no provision for loan loss. But if something happened, then say this is the contractual cash flow, 10, 10, 10, and 210. Then the expected cash flow cannot be like this anymore. So for example, in this year, the customer or the debtor cannot pay anything. But for this next year, they can pay 14 million. This is bigger than this. And this one is 14 million also, bigger than this. But this one is smaller than this. They can make it 80 million and 80 million. This is called debt restructuring, yeah, loan restructuring. So the restructure from the original contractual cash flow into new cash flow, new contractual cash flow, yeah, this one. So we have to find the difference between this and this, find the difference. Yeah. Then we calculate the present value of this. We get here minus, yeah, minus because the new cash flow is smaller. The present value is less. Yeah, present value is less because this is actually it should be 5 years and then it's prolonged into 6 years, right? So the present value getting small. So because of this negative value, so the bank has to recognize the loan losses. So they have to make journal, debit loan losses, 49 million, then provision for loan losses, 49 million. Then, this kind of calculation lasting until 1 January 2020. 1 January 2020. So after 10 years, calculation of loan losses is like this. The regulation is changing anymore. Yeah, change again. Yeah. So since the IFRS 2010, that is, IFRS 9, yeah, IFRS 9, 2020 in Indonesia is 2020. IFRS 9, we cannot use this calculation anymore. Yeah, cannot use the calculation anymore because the loan losses recognition is getting what do you call it, more conservative. Because of this, yeah, IFRS 9 adoption in January 1st of January 2010, the journal entry, usually if you make a loan, the journal entry is only this, right? Only this, debit loan, credit cash. If you make a loan, then we have only this journal entry. But since IFRS 9, the journal entry is not only this, but we have to make loan losses provision. Yeah. Loan loss provision, yeah, this is the small amount at 233,000 rupiah only. Yeah, only this for small amount. I will explain it later. Then the credit is provision for loan loss. So you can see the difference. Before this, the journal entry is only this. only this, debit loan, credit cash. But since January the 1st, 2010, the journal entry is added by this. Debit loan losses, credit provision for loan losses. Where it comes from? So because of this, yeah, we have to make an anticipation. Yeah. So since the IFRS 10, when we make a loan, uh, 31st December, Q1, yeah, Q1, we make this loan. Then when we make loan, at that time, we have to make an anticipation. Anticipation of what? Anticipation of what will happen 1 year after this. 1 year after this, what will happen? We have to make an anticipation. Say if you make an anticipation like this, say we have an anticipation like this, so this will happen next year. Next year will happen like this. So we will have to recognize loss, yeah, 49 million. Then present value of this, then we get only this 233,000 rupiah only. Yeah. So we have to present value this. Yeah. Sorry. Before present value, we have to multiply it by probability of this loss. Probability of this loss. Yeah. Probability of this loss. Because say if you have the probability 1.5%, then we multiply this into by 1.5%, then we present value it. So we get 3,233,548. Yeah. What is the difference between IFRS 9? So if in IFRS 9, the journal entry is only this, then 1 year after this, you have to make a loan loss provision for 49 million. 49 million. This is will be recognized 1 year after the loan is extended. 1 year after the loan is extended, you have to recognize loss 49 million. But after IFRS 9, since 1 January 2020, we have to make an anticipation for this. This will happen 1 year after this. We have an anticipation of that. We have to calculate what is the probability that this will happen next year. We have to find data from all the bank portfolio. Yeah, from the all portfolio, we have to calculate what is the probability that this loss will happen next year. Say we get the number is 1.5%. So out of 200 customers, there is one customer that will be like this. Yeah? We will get lost 49 million. So out of 200 customers, there is one customer that will make this loss, yeah, 49 million loss. Then we have to calculate the expected credit loss. 1 out of 200, that is 0.5%, isn't it? 0.5% times this, we get this. Then because this will happen 1 year after that, after now, so we have to present value it. So we get the number of 233,000 rupiah. So the journal entry will be like this. Yeah. So every time bank make loan, so say today bank make loans, then today also bank has to recognize loss by this journal entry, loan loss and provision for loan loss. That's why IFRS adoption make the bank profit for 2020 lower. All the banks make because of this implementation, the profit of all banks getting lower. But fortunately, there is fortunately or unfortunately there is also pandemic in Indonesia. So what makes the drop of the profit of the bank is not only the IFRS 9 but also the pandemic. As you know, January or February 2010, there is pandemic start, yeah. Pandemic starts in 2005, 2010, 2020, January 2020, and at the time also there is a pandemic. So there are two event at the time that makes the bank profitability drop, yeah, in 2002. One is because pandemic, second is because of the implementation of IFRS 9. Another issue is that since IFRS 9, the loan is recognized not only when the bank extend the loan, but also when the bank extend a commitment for loan. Commitment for loan, not loan, commitment for loan. So maybe it's easier to understand the loan provision for the commitment by this example. Yeah. So this is an example. Bank issued a credit card with credit limit of 100 million. Yeah. Bank issued a credit card with credit limit of 100 million. Then say the customer who the card holder use only 10 million of the limit, only 10 million. So the customer maybe go shopping, they buy goods for 10 million. So the credit card receivable is actually only 10 million, right? Because the customer, although he has a limit of 100, but they use only 10 million, say on the last day of 2020. They have only used the credit card only 10 million. So the receivable, credit card receivable is actually 10 million. But the regulation of IFRS 9 stated that the loan provision should be calculated like this. This is before IFRS 9. Before IFRS 9, the loan loss is, so this is the probability of default is 7%. That means that every 100 cards issued by the bank, every 100 cards issued by the bank, there are 7 will default. 7 out of 100 cards will default. So the probability of default is 7%. Then each time default happen, the bank will try to recover the loss. They get only 20% of it. 20% of the loan in default can be covered by the bank. So 80% will be lost. So the probability of default is 7%. The loss given default is 80%. Now, what is the expected credit loss? The expected credit loss before IFRS 9, the expected credit loss will be 7% multiplied by 80% multiplied by 10 million. Isn't it? 7% multiplied by 80% multiplied by 10 million. Why? Because the receivable is only 10 million, although the limit is 100. But after IFRS, the loan losses is not like that anymore. The loan losses will be here 7% multiplied by 80% multiplied by 10 million plus 20% times 90 million. What is 90 million? 90 million is the loan commitment given by the bank but not yet utilized by the customer. 90 million is the commitment, yeah, the commitment. The bank has already allowed the customer to use the credit card until 100 million. Because the card holder use only 10 million, but the bank still has a commitment to give the customer loan for 90 million. Therefore, the exposure at default should be added by 20% times 90 million. Where is 20% comes from? 20% comes from the regulator. From the regulator, I think this is not only the Indonesian regulator, but it's from Basel. From Basel, that is international regulator. So the 90 million must be multiplied by 20%. That is how much is it? 20% of 90. Yeah. 18 ya, 18 million ya, 18 million, 18 million. So although the bank has only a 10 million receivable, it's so the bank should recognize that as though it has loaned 10 million and 18 million, so 28 million loan. So the loan loss should be recognized this, yeah, this bigger than this, of course, right? It's only 560,000. This is 1,568,000. So it's getting bigger than this. What is the impact of this? And actually, what is the regulator or the standard setter? Why does the standard setter use this regulation? Actually, the standard setter of IFRS, there is maybe cooperation, yeah, cooperation between the standard sector and the Basel, yeah, regulator for the banking sector, because the regulator state that for the loan commitment, the bank should also provide capital, not only for their loans, but also for the commitment for the loans. Commitment for the loan is not yet become loans, but it should be recognized as though there is already give the loan by multiply the what you call it, multiplied by the 90 million here, the commitment, by the 20%. 20% is called credit conversion factor. Credit conversion factor is stated by the Basel Committee. Basel Committee, that's international standard for banking operation. Yeah, that's the cooperation between among central banks that regulate the operation of bank, especially for determining the capital that must be provided by each bank. The Basel Committee stated that 20% of the loan commitment is considered as loan, although it's not yet loan. Yeah. The bank has considered as loan, so the bank has to provide capital for that. Then, because of the regulation from the Basel, maybe the standard setter for IFRS follow that, follow the regulation from the Basel. Then they changed the IAS 39, that is 2010, into IFRS 9, January 2020. They add this, they add this to calculate this one, exposure at default. Exposure at default added by 20% times 90 million. That is the commitment, loan commitment. So you can see here that the profit or the profit of the banks getting smaller again. So the bank, especially with credit card business, because of this, their profit down. The profit down because they have to recognize more loan losses. More loan losses. That is the impact of the banking index. What else? The impact is that usually bank will be more conservative in extending their credit card. Will be more conservative in issuing their credit card, because every time they issue credit card, they have to recognize loss. Although the credit card has not been used by the customer, but they have already recognized, the bank has already should recognize the loss. So the bank should be more conservative or more prudent in issuing their credit card. Then the last one, I think this is the last one. The last one is to calculate the expected credit lifetime expected credit loss and 12-month expected credit loss. So if a bank has like this, banks like this, bank give loan 100,000, then this is the flat interest rate, flat interest rate 5% per month per year. 5% per year means 25% for 5 years. Amount 100 million, say 100 million, the interest is 5% flat. 5% flat means 25% flat for 5 years, right? 25% and 100 million, it becomes 125 million divided by 5. You got 25 million. So the loan, the exposure at default will be like this. This is the exposure at default. 100 million. This is the cash flow. This is the cash flow. 100 million, we give the loan 100 million. Then this is the inflow. Then we can use the IRR formula of Excel to calculate the effective interest rate. We get this. This is the effective interest rate. We can use IRR formula. We get this. Then we make a cash flow. Cash flow like this. This is the balance. This is the profit or loss. This is the cash flow. This is the closing balance. Yeah. So the opening balance will be getting smaller. Yeah, getting smaller because of its paid. Yeah. This is the interest. This is the, so the difference between 25,000 and this is the installment for the principal. Yeah. This is the interest. This is the interest. This is the cash flow. And installment is 25 deducted by this is the installment of the principal. Then we make this one. This is the balance. This is the balance at the end of the 2019, 2020, 2021, 2022, 23. This is the exposure at default. This is the probability of default. This is the loss given default. Then we multiply this by this, yeah, multiply this and this and this, and we get this, yeah. Then we make the present value, yeah, the present value of this, we get this. Then according to IFRS 9, we have to recognize the loss. This one, yeah, the probability of default is the, this one, yeah. This is the probability that the loan will be in default in the next year, 1 year after the loan is extended. 1 year after the loan is extended, what is the probability? The probability is this, and the loss will be like this. So if the bank give a loan, although there is no sign that there will be a trouble for this customer, yeah, the loan is still good, but the bank should make a loan provision. How much? This amount. Yeah. This is called 12-month expected credit loss. Yeah. 12-month expected credit loss is this. Then, if the loan getting worse, yeah, getting worse. So if there is a financial problem in the debtors, then the bank should recognize the loss for the sum of this. So you add this and this, this and this and this. If you add all of this, then you have recognized the loss for the whole of this. So if the bank, the customer still good, the loss will be only this. But if the customer getting worse, then the loss recognized should be the sum of this. Sum of this. So this is the IFRS 9 2020. Well, from the long story like that, we can see that counting standard is always changing. Yeah, it's always changing. So we cannot expect that the standard will be stay like that all the time. Yeah, it will change. Always changes. Yeah, I show you only 2010 and then 2020, but actually in the meantime, yeah, during the 10 years, actually there is also a lot of changes. A lot of changing happened between 2010 and 2020. So we can conclude that the accounting standard is really not a static one, but it's a dynamic. The accounting standard is always changing. It depends also on the environment. It depends on the environment. Before 2010, Indonesian banking industry is under control of the government only. Yeah, government only regulate the banking sector in Indonesia. But after 2010, the regulation is not only stated by Indonesian government, Indonesian regulator, or Indonesian Accountant Association, but also influenced by the regulation worldwide. Worldwide regulation, worldwide accounting standard influence the Indonesian accounting standard. Why? Because the economy of Indonesia getting open, yeah. Indonesia opened their economy for the investors all over the world. Then, because of that, Indonesia has also to follow the international regulation on accounting standard, that is IFRS. So from this development, we can see that the environment of business can change the accounting standard. Then in 2020, there's also another major change in the international accounting standard. Then it also influenced the Indonesian accounting standard. Then also the business operation is also influenced by the changes of accounting standard. Yeah. Before 2010, many bank which has a lot of consumer loan, usually they use the flat interest system, yeah, flat interest system. But after 2010, many banks changed their interest into they call it flat to effective, because flat interest rate is actually easy to, we can easily explain the flat interest to customer. Yeah. Then annual interest system is difficult to explain time value of money or interest on interest, annual interest to customer on the street. It's difficult to explain that. Yeah. It's much easier to explain the interest calculation by flat, and the customer also happy with the flat interest calculation. But because accounting the accounting standard do not allow anymore to calculate the interest income using flat interest system, then they have to change the calculation of the interest revenue. After that, also they also changed the interest stated to customer. So the interest, the accounting standard actually can influence the daily operation of the bank. Like in the credit card business, yeah, credit card business, after the new accounting standard in 1 January 2010, the operation of banking sector for the credit card business getting more conservative. So we can conclude that accounting standard can also influence the daily operation of banking sector. I think that is my after continue following the development of accounting standards since 1995, yeah, up to now. That's what lesson learned, yeah. Lesson learned that we can conclude, I think. Okay, that's all my presentation. I think this should be only the beginning of the discussion. Yeah, I invite Mr. Sparta, also Pak Undoro, and others. Maybe let's discuss this. Also, all the students. Well, that's all my presentation. Thank you. I give back to the master of ceremony. Nurlita ya. Nurlita, I
Yes,
give
sir.
it back to you.
Okay. So for the next event is discussion. Maybe from the participants would like to ask the questions. You can raise hand or you may ask it by column chat. Yes. Yes. I want to ask the question. Okay. Here's Sulistiawati Listi. Maybe.
Assalamualaikum.
Okay, Waalaikumsalam. You can.
Waalaikumsalam.
Mohon izin Pak. Terima kasih Pak Mukhlis. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi wabarakatuh.
Menarik sekali presentasinya.
Waduh.
Saya awam di bidang akuntansi, tapi mohon izin bertanya. Ini pertanyaan dasar, barangkali nanti bisa dijelaskan kalau bicara tentang instrumen keuangan. Kemudian dikaitkan dengan akuntansi, itu ada istilah yang menarik bagi saya, yaitu hedging accounting. Nah, could you please explain us about it? Thank you. Assalamualaikum.
Sulistiani dari mana nih? Manajemen ya?
Saya di Syariah, Pak.
Oh, jadi di kelas Syariah tahun berapa masuk?
Masuknya 2016 ya, tapi ini tugas belajar masih di Universitas Airlangga, Surabaya.
Oh gitu.
Ya.
Oh ya. Ya. Jadi, okay, hedge accounting. Hedge accounting usually hedging usually bank use derivative to make hedge transaction. Then what is derivative? I think we have to explain that also, Susilawati. Hello, Sulistiawati. What is derivative? Derivative is actually a contract that is a contract to buy financial assets. That is derivative. A contract to buy a certain financial asset at a certain price at a certain date in the future. That's why we call it derivative. If we buy a bond, that's not a derivative. We buy a bond, that's not a derivative. That's called cash transaction. You buy a bond, pay cash, you get a bond. That's not a derivative. But if we make a contract to buy a bond next year, we make a contract to buy a bond next year, that's a derivative. Usually derivative is used for hedging. What is hedging? Hedging is actually a contract that generates cash flow. We can generate cash flow with the opposite of our existing cash flow. So if we buy goods from abroad, we import certain things from other countries, say $100 million, we have a cash flow of cash outflow next year $1 million. We have cash outflow $1 million next year. Then we have risk of higher interest rate, right? If the interest rate is higher than say 14,000, then we have pay more than 15 billion rupiah. Yeah. Say if today $1 is 14 million rupiah, then we have an obligation to pay $1 million next year. Then our cash outflow will be $1 million times 14,000 or 14 billion rupiah. Then if the if the exchange rate move up, say 15,000 per dollar, then our cash flow will be 15 billion instead of 14 billion. That means we get lost 1 million rupiah. To protect ourselves from the loss, we make a derivative transaction. Derivative transaction is for this transaction, the derivative is a contract to buy dollar. So if we buy dollar, it's not a derivative. But if we make a contract to buy dollar, that's derivative. So we make a contract to buy dollar $1 million. We make a contract to buy $1 million next year. Say for 14,100 rupiah. 14,100 rupiah. Then we make, because of this contract, we can make a cash inflow next year. Yeah, cash inflow next year in dollar, $1 million. That is exactly the opposite of our existing cash flow. Our existing cash flow because of import is cash out 1 million rupiah. Then because of the derivative transaction, we will get a cash inflow 1 million rupiah. Because the cash outflow and the cash inflow is the same, we call it square position. Then we are protected from the changes of interest rate. That is called hedging transaction. The IFRS 9 and also in Indonesia PSAK 71 ya, and PSAK 555 at 2010 is regulate the hedging transaction very expensive. A lot of paragraph there regulate the hedging transaction. But fortunately, because the banking sector is not many banks conducted the derivative transaction anymore now. Yeah. Compared to before crisis 1998, yeah, before crisis 1998, Indonesian banking industry make a lot of export-import transaction. Yeah. But after that, not many exposure to foreign exchange to the banks, not as big as that time. Yeah. That's why the transaction of derivative is not really heavy in Indonesia now. Yeah. Only the big banks like BCA, Mandiri, BNI, only maybe 5 banks conducted derivative transaction. That's why the accounting standard for hedging is not many banks read the regulation on hedging transaction. But the hedging transaction is actually the principles of accounting standard for hedging transaction is actually the same with all other standards, that the bank should describe the transaction, the hedging transaction, as clearly as possible. Yeah? Actually, there are maybe three kind of hedging transaction. What you call it? Cash flow hedge, Then there is also fair value hedge, and yeah, cash flow hedge and fair value hedge. If a bank has a cash flow like that, like import transaction, we have cash outflow, then we make a derivative to buy forward dollar, $10 million. Then we make a cash flow hedging. Then the accounting standard is that the profit from the hedge item, should exactly the same with the loss from the hedge instrument. So there will be no gain or loss because of the derivative transaction. So the loss from the hedge item should be the same with the gain on the hedge instrument. So the gain on the loss instrument and the loss from the hedge item should be the same. Why? Because the purpose of hedging is actually to remove the risk, right? To remove the risk. That means the hedging transaction is actually to make the gain or loss become zero, right? Because of that, the accounting treatment should also describe like that. Usually, accounting regulations scrutinize whether the derivative transaction really conducted for hedging, because many companies do the derivative transaction actually for speculating. But when they get lost, they make it as though they use the derivative transaction for hedging. They try to find the pair of the loss with the profit so that there will be profit plus loss will be zero. Again. So the accounting standard for hedging, the first thing that they regulate is to make sure that the derivative transaction is done really for hedging the transaction, the business transaction that really happened to the company. That is the main idea of hedging transaction, standard for hedging transaction. I think that is the principle of accounting standard for hedging transaction. That is the loss for the loss of profit for the hedging instrument should be exactly the same with the gain or loss for the hedging for the hedge item, for the object being hedged. I think that is the main principle of hedge accounting. Does that answer your question, Ms. Sulistiyawati?
Thank you very much.
Oh. Any other, Nurita?
Is there any another questions? Maybe you can raise hand and open your microphone. Is there another question?
If no question, and can I ask question to the students?
Yes, you may.
Usually in class it's no question, then I ask question. Ya Bu Wiwi, kalau nggak ada yang tanya kita tanya ya Bu Wiwi.
Ini Pak Muklis ini rapatnya dua-dua nih, mau rapat wisuda. Ya gimana? Ada yang dari Malaysia, ada yang mau bertanya nggak ya yang dari Malaysia?
Kalau nggak ada yang tanya kita tanya.
Coba Nurlita bisa dilihat ada yang dari Malaysia nggak, Nurlita? Yang dari Malai?
Karena di namanya nggak ada apa kayak
Nggak ada itu ya.
gitu.
Harusnya di rename
Jadi,
ya, Malai, IBS kita UiTM, IBS gitu ya.
Iya, Bu. Jadi,
Di rename
jadi
ya.
sudah ketahuan.
Aida Fatini, mana Aida Fatini? Saya biasanya kalau nggak bertanya saya tanya.
Iya.
Aida Fatini dari mana tuh Aida Fatini? Aina Najwa. Bisa ditangkap nggak sih ya penjelasan saya ya?
Bisa sih Pak, cuman ini kan secara general ya, kalau mahasiswa memang kan, tapi sebenarnya udah dikasih hitung-hitungannya juga ya Pak ya, interest amortization ya. Iya nih. Ya gimana Dede, mahasiswa dari IBS?
Jadi ini yang terjadi di praktek gitu loh. Jadi praktek itu seringkali ngeributin apa sih gitu kan?
Iya, iya.
PSAK 5055 itu kan tebelnya tuh kalau cetakannya tebelnya kira-kira mungkin 1,5 senti ada kali tebelnya PSAK-nya itu ya, kalau di print kira-kira 1,5 senti tebelnya. Ini kira-kira mungkin 300 halaman ada.
Iya.
200 halaman kali ada ya. Tapi dalam praktek yang dibaca itu nggak nyampe 10 halaman sama bangkir-bangkir itu.
Iya, iya.
Jadi dari segitu tebelnya PSAK 5055 itu yang dibaca itu paling 10 halaman, 15 halaman. Mengenai apa ya, CKPN aja.
Iya.
Jadi mengenai hedging itu, waduh berapa tebelnya di PSAK 5055 itu dibahas mengenai hedging. Tapi nggak pernah dibaca oleh bangkir. Karena yang melakukan transaksi hedging itu sedikit sekali.
Iya, iya.
Nah, yang mereka ributin itu apa? CKPN-nya berapa sih gitu. Karena CKPN itu langsung mempengaruhi laba rugi kan. Mana sih ngitung CKPN itu? Nah, gitu. Jadi sebetulnya IFRS ini punya kelemahan ya. Karena accounting standarnya itu internasional, padahal Indonesia budayanya masih belum seperti yang terjadi di dunia internasional. Akibatnya PSAK-nya juga jadi wasting gitu ya. 300 halaman yang dipakai cuma 10 halaman.
Iya.
Dan PSAK 71 ini juga tebelnya itu ya segitu juga itu PSAK 71. Memang lebih tipis sih dari PSAK 555. Tapi yang relevan buat kita juga cuma sebagian aja. Nah ini kelemahan dari PSAK internasional yang ditarik jadi PSAK lokal. Gitu.
Yeah.
Jadi regulasinya itu melibatkan banyak sekali transaksi, yang diambil akhirnya sebagian aja yang memang banyak transaksinya di Indonesia, yang nggak banyak ya yang nggak dipakai juga.
Iya benar.
Yang saya bahas ini hanya sebagian kecil aja dari PSAK 555 atau PSAK 71 yang sering diributin sama orang-orang bank. Yang sering dipermasalahkan sama orang-orang bank itu apa sih? Nah, misalnya seperti ini, klasifikasi ini. Klasifikasi ini dulu rame diributkan, tapi lama-lama nggak pernah diributkan lagi. Kenapa? Karena nggak ada kredit yang masuk FVTPL, nggak ada. Nggak biasa bank itu jual piutangnya dijual, itu nggak ada. Kalau di Amerika emang biasa, piutang dijual. Nah, itu makanya terjadi subprime mortgage dulu itu tahun 2009-2010 itu kan karena bank-bank itu menjual piutangnya dijual, ya, lalu dia dapat dana kasih piutang lagi, lalu piutangnya itu dijual lagi, gitu kan? Nah ternyata piutangnya macet, surat berharga yang dijual tadi juga macet, muncullah krisis tahun 2009 itu. Kalau di Indonesia,
Mukis foto bersama, Mukis mau rapat.
Karena mau rapat lagi.
Iya.
aduh, ya udah, silakan.
Materi Pak Mukis di stop dulu, nanti kita ada foto bersama.
Oke,
Boleh.
oke, jadi stop ini ya, stop share.
Ya, Pak.
Oke.
Oke. Silakan dibuka videonya.
Ya, mumpung masih ada 40 orang mahasiswa nih, dibuka semua fotonya, itunya, videonya, adik-adik.
Ya. Tadi sempat 72 orang. Hitung ya, 1. Belum buka semua nih kayaknya.
Ya, belum buka semua nih, malahan yang buka sedikit.
Iya.
Ya, Natasha, Noraskin Ismail, Nur Amsyar. Nanti kalau berikutnya kayaknya rename ya, IBS sama UiTM gitu ya Pak. Jadi ketahuan
Iya,
mahasiswa
betul.
ya Pak.
Iya.
IBS atau mahasiswa UiTM gitu ya.
Belum buka semua nih. Pak Mukis sudah selesai, Pak Mukis? Sudah?
Belum.
Halo.
Belum.
Oke, 1.
Masih 30 menit lagi.
1, 2, 3. Oke, 1. Masuk sebentar. 1, 2, 3. Udah Pak Muklis, lanjut Pak Muklis.
Ya.
Saya live dulu, mau rapat Pak Muklis, live dulu.